Good afternoon, everyone. Well, market's been kind of trending down here. One of the things, just as what I use, as the market begins to bounce from some reference point, which you can see, right there, the green line that I put there earlier today, it had that hourly reversal there. The next step is, does it break the 5-minute downtrend? And this came close. It came right up to the prior high, which would be our major resistance point. And now it's rolled back over again. So now, the obvious question is, can it stabilize enough here? Does it just, continue the downtrend? Does this retest result in a retest and failure type of setup? So we wait and see. That reached the gap fill area. Right? So we always look at it as an area. It doesn't have to be an exact point. We know that there's going to be some buyers there. And can it hold here or not? If it does, we can look for things that may be showing some relative strength if they turn around, or things that may have bounced. Are they ready to resume their downtrend? One second. One sec, guys. Okay. So we wait and see here. My oil stocks refuse to give it up. So I've got that sitting there with that big room that I've given it. And so what I need to have happen here to consider adding to it, I need to see it break this hourly uptrend here. And it kind of did a little bit, by trading under this low, but it just come down into the gap fill area there and buyer step up. If this will roll over, well, that could start the momentum to the downside here. And that's why I look at my 5-minute like this. Well, I like to look at the hourly just to see, what that looks like. I know that 200 MA is telling me that hourly is still up. So if this was extended from that 200 MA on the 5-minute, but, it was breaking down here, that could have been a consideration. But if this will break lower here under there with this daily, that'll pick up some steam to the downside. It's not there yet. So we wait. This one I got my alert on the other day, but the markets were going up when it broke lower here. And I like this lower. And this can be shorted under 60.80 here. Put a stop above 61. We've got an hourly sell. As you see, the 20 MA is declining here. It's in a downtrend. Now this chop over here, a little bit of a concern, but more so just this day, that tail there. But based on, this downtrend, it should go below it. I don't know if it'll do it today, but we'll see. Well, there's a setup there. So paychecks below 60.80. That CL has to come off of my flagged list. I was looking at this one yesterday, if it can clear this high up here, and it did, but things weren't, it never triggered on the intraday. So just get rid of that. The W day I mentioned before for tomorrow, if it can get above these highs, because that's holding up really well in a down market. Just an inside day going sideways. The grub, below its opening price, so doesn't look as good, but overall, just a little sideways chop there, within that breakout bar, that wide range bar. This one I missed. I'm taking that out. This one just consolidating again, a little extended, but going sideways there. So I'll keep that one there. This one might need a little bit more pullback, or we'll see if it turns around. And these oil stocks, well, oil is still in an uptrend. It's still strong on the daily, but, weaker today, pulling back on the hourly. It's, it's in an uptrend, pulling back to support. And just going down here, and it's turned around. And I have to change this. That's okay. This one did drop, but didn't set up for me. I'm still waiting. And there's the paychecks. I'm still holding up here, and could be, just the fact that the market, it is holding here. It's trying to hold, just grinding sideways. Yeah, tick popping. Yeah, tick popping a little bit. Only, but it didn't get above 600 or even 500, but it did pop up there. Yes. Let me take a look at my other charts here. I can look at a lot of stuff at one time.
Yeah, hi traders. Yeah, I just got off a phone conference there. But that Papa Mike, Philip Morris, bounced on the hourly. So if we can get a higher low now, then that's what I'm looking for. Greg, I just saw an email come in with the heading of even more reasons why Tesla could crash.
Somebody must be short.
Yeah, exactly. And is this daily going to turn into kind of a sloppy bull flag? It's sure holding up superior to the broader markets today.
Yeah.
But yeah, it's funny, everybody has an opinion. And you remember years ago, I wrote that article called, I remember the title, it was blah, blah, blah. Just hit the mouse.
I remember. I don't remember the article, the details of it, but I remember the title.
Yeah. People are just out there, blabbing about their opinion, whether they're ultra bullish or bearish. And I guess, I get tired of hearing it. It's like, just shut up and short it then. Shut up. If you're bullish, you buy it. If you're bearish, you short it. And that's what makes a market, opposing, views. If everybody's on one side, then there's nobody left to trade with, and it's ready to reverse.
Well, Goldman Sachs said it's going to 195.
Well, it's not today.
Well, we'll see. They're not day trading.
Right. Yeah, Pam knows about that bandwagon, exactly. Greg, our Nitker NTGR, we sold half, and I had a target for the back half of 64.50. And despite its best efforts, the hourly didn't get there.
Hold on, Dan. I have to get a link for your webinar later today. Someone's asking for on YouTube.
Oh, and yeah, Thomas from France just emailed me, and I just sent it to him.
I don't know if it's the same Thomas.
Thomas,
drop it in the chat here with me, and I'll just put it in YouTube just to be sure.
Okay, yeah, I just sent him the emails. Thomas Vogel.
Yes, that's it.
Yeah, I just emailed it to him. But here, I'll still give it to you in case others want it. Yeah, Spider's 10-minute had a potential higher low, but it's just not doing it right now. 237. I'm still sidelined until we get some more confidence. All right, there you go. That's our webinar at 4:15 today on how to leg into covered calls and why to sell covered calls, the benefits, and credit spreads, and how they're related to covered calls, but it's a new position.
Sloppy, but holding. Akamai from this morning. We'll see if it turns around. It will be good. I mean, it held up, relatively speaking, to the market. We shall see if it can get through here. Well, it's just going to continue to be slop.
Well, this IWM pushing up, spiders. Maybe it's a higher low here.
Maybe.
Yeah, I want it to go over the prior high before I start messing around with anything. Spiders, you know, gap fill. Diamonds higher low.
I had like a chart down below the other ones, not to, so I can keep an eye on them too while using the TC. So that's the kind of like little base that's beginning to form there on that support area on the 5. Yeah, John, it'll be recorded.
All right, there the spiders go. $267 puts that expire tomorrow, 45 cents. I guess my confidence level's not as high enough for holding overnight right now.
If you buy them now, you'll know by the close if you're right. We're short them.
Well, other than the overnight risk, but yeah, I hear you. I mean, the hourly I like. I mean, it's 1, 2, 3, 4, 5, 6 red bars, gap fill, green bar with a topping tail, but the next hourly bar is deep into it with a higher low on the 15-minute chart. So, it makes sense, but I would feel 10 times more confident if we had a retest on the hourly, but,
That's
market
not
doesn't care what I want.
That won't be today. I don't think so.
Well, right. It's impossible because it's 245.
So what I'm thinking about that, Dan, is so if you do with the hourly, and that's the setup there, assuming that this was going to work, that could be up here, right, by the close. Whereas your confidence level in the overnight would be completely different than it is now.
Correct.
If it didn't move up, personally, I would just kill it.
Right.
Because then I wouldn't have the confidence in the overnight.
Right. And my, stop is under the day's low right now. So it'll still turn into a loss if you stop out.
Well,
but
I mean, just kind of spitballing it.
No, I follow what you're saying.
What would the loss be?
Well, how I answer that question, here, I'm going to show. Let me show my.
I can bring up an option table if that's what you want to see, but I can take this down if you like.
Well, I'll just override you, or do you have to?
No, you can just hit stop share and put yours up.
Yeah, no, I guess, yeah, exactly. So I'm going to show you how to answer the spitball question. So spiders right now, 268 and change. It's about 44. So here's what I do. And we're contemplating 268. Okay, and we're contemplating selling this 267 for 45, 46 cents. So Greg just asked me the question, how would I spitball the loss without having, complicated option software? And here's how I do it. If the low of the day is 267.72, so that is 30 plus 40 is 70 cents away. So it's not going to be perfect. But if this were, all right, so we were saying the 267 is this. So I would go closer right now. So it's going to be, let's just say the stop was $1 away because the math's not perfect right now. If the stop were $1 lower, and I'm willing to sell this now at 47 cents a share, and the stock goes $1 against me, well, guess what? It's like me being short the 268 puts, right? It's $1 closer to my short put price. So your spitball answer is 77 minus 48 is what? 27, 28, 29. So let's just call it a 30-cent loss. That's the answer. That you could sell it now for 47 cents, stop under the low, and if you get stopped out, it should be, just put it in a range so you don't get mad at me. 27 cents to 31-cent loss, somewhere in there.
20 cents, Dan?
No, what did I say? 27 to 31. Yeah, somewhere in there.
Not bad.
Right. And so I'm not doing it right now because we made a higher high on the spiders intraday. And guess what? The bar's not closed, but now it's a topping tail. So there's still nervousness.
There's always nervousness at the turn.
That's an interesting comment.
Whether, if you're looking to be a buyer, you're nervous. Is it actually the turn going to follow through? Which, there's no way to ever know for sure. And if you're short, you're nervous because the turn is developing and you're worried about it going back at you. So everybody's nervous at the turn.
Right.
Same thing, at the high.
And then actually, here's maybe just a quicker and easier way also to look at, to answer your question. So the 267s have a delta of 31. And it's pulled in a little bit. It was probably a delta of 29, when we were talking about it earlier. So a quick and dirty answer is if the stock drops $1, then there's my answer. My option's going to go 31 cents against me. So we were dead on with our estimate there. But that's based on $1 fall. So that doesn't work if our stop is not around $1. So you just kind of have to spitball it like we said. Let's see, anything else I need to show you while I'm showing you the option screen? And then, you always hear me talking about, hey, you can pick your own poison. So you could go $1 lower. So the 266 puts, and sell them for 30 cents instead of 46. So you're taking in 18 cents less. So your maximum potential gain is less, 180 bucks on a 10 lot, but you're going to lose less if it goes against you. And that's a trade-off. And once we get a more bullish turn, maybe on the hourly, then we can go out further in price here. So we can do, this one is Monday. Let's just see let's see, the further out in time you go, I like going further out of the money to give me a bigger cushion. So let's just hypothetically say it sets up tomorrow. I'm still looking on the hourly chart, and the 266s might be great. And just the prices right now, the 266 for Monday is 57 cents. Let's look at the implied volatility of spiders right now. See, it's way off the highs. It's 81% implied volatility, versus 97, 8, 9, 100 when, you're close in the middle of the storm. And that's why we were getting paid more for the risk. We're in the middle of the storm. But it's still respectable, and I love these short-term options. So it's always a go-to for me.
Vince, on the Oxy trade, right? The stop wasn't hit. Would you keep it for a few days? Well, initially, I did look at it as a day trade. As oil was going down, obviously, I thought it would crack further. Now, the reason to even consider it was the fact that it's Dan took his thing down. Hold on. It's a climactic sell on the daily. There's a lot of oil stocks that look somewhat similar. This one is a bit further extended. I would be okay with holding this for a few days. Earnings are not for a while yet, and it did crack the prior day's low. It's just holding up here. And as I mentioned earlier, the momentum typically doesn't pick up until, the hourly actually breaks. So now we get multiple time frame alignment. Well, this is climactic. It's still in an uptrend, but extended. That rolls over. And then your 5-minute obviously will roll over as well if that does, and then momentum picks up. But it is okay for several days. Stocks within that sector, we could see if any earnings are coming out. That could affect it. Hold on here. They call that next. I always forget what they start that with. Crude oil is in an uptrend, and there's been buyers there. It's gotten a little weaker again here. So earnings, the end of the week, we've got Schlumberger coming out. And that has historically, as a recent history, has been weaker. Right. This one here is related to General Electric. So not as extended as the other, but a little short-term extended there. So all of these, if they start rolling over, it's going to be, they're all going to come in a bit. And just looking at XLE, right, that's had a big move. It's stalled here for a couple of days. So we look for that hourly to roll over, and then we probably see additional weakness for maybe a couple of days where buyers will probably step up again. These buyers aren't going to go away unless, all of a sudden these things just fall apart, and there's nothing to suggest that's going to happen right now. Right. So these are reporting next week, but buyers have been aggressive on them. Right. This one was a bit doggy. It gapped down the other day. VLO. Right. See, we're seeing similar pictures. So nothing. Well, at the end of the week, you got Schlumberger with earnings. That
Well, like you said, Greg and the Spiders, it's nervous at the turn, and that's so I actually like the bobbling around here, building a base, and with an hour to go. So
as time goes by, everyone looking for a low point gains confidence because it's not going down. And those that are short begin to lose confidence. So as we come into 3 o'clock, we got a minute to go. You come into the end of the day, the last hour of trading, where everybody needs to make their decision based on what their assessment is of what's happened throughout the day. I look at that and I say, well, as I said this morning, this little corrective day that began with this gap down, it really doesn't change anything based on the daily chart. Having moved up to the resistance area, this was actually expected. And it's held up relatively well. Now, if I'm looking at this as a swing trade, right? Versus selling a put that expires tomorrow. Right. We say, well, where would I want this as a swing trade? It would be down here where I'm putting that green line. So if this actually moved down, and as I kind of in my imaginary thoughts of what I see on the chart and what's possible, and I say, well, what would that set up? And that would, based on the method that I use and what I look at, would be a measured move to the downside, meaning this reversal on the hourly fails, prices go lower tomorrow into this inside gap right here, and that gets filled, and that's where the turn becomes. And this picture that's developing on the 5-minute happens down here. So as a swing, that's what I would look for. Now, Dan made a comment earlier, what he sees doesn't necessarily mean it's going to happen. And that doesn't mean that this is going to happen. But, as a swing, this retracement here is too shallow versus a deeper pullback into that support area makes more sense, because then it's got more room to go higher. So let's just assume that the second scenario of a measured move doesn't happen. Well, tomorrow's the end of the week, but let's kind of ignore that for now. And tomorrow turns out to be a green day, and this is the low, and it goes back up there. Well, then that would shift my bias to, okay, it's not going to pull back, and now we have the potential for a measured move higher to the upside. And this is where the bar by bar analysis comes in to play. So everything that we use not only allows us to update information, if you use it, it forces you to update the information, because once you will become exposed to this knowledge and start using it, and you ignore it, it's like anything else. You got a position on and it's going against you, and you're like, you don't want to accept that, so it creates tension. So we try, not try, but, because we're human, I have to say try to be as objective and flexible as we possibly can be with the time frames that we're trading within. GTLS. Metal fabrication and a thinner stock. So it's pretty messy in intraday, but nice rally off of the low and a bottoming tail bar there. And so I go out to the weekly and take a look. Coming off of the low there, it's been an uptrend for a while. I can tell that it's had a correction. It's made the turn, and I would assume the monthly looks decent. Yeah. It came down to that significant support, and it made the turn. Look at the bullish price action at resistance here. And now, it's into the void. So I like it a lot, Tim. Choppy, sloppy sideways there, but that's okay.
Spider's more confidence right now. Those puts that we were looking at that were 47 cents are now only 38 cents. So they're 9 cents left already, less than they were with greater indecision. So just another comment on the spiders. I love selling them on expiration day. So tomorrow, with no overnight risk, in the first 30 minutes, we get our setup, and I just sell out of the money puts that expire tomorrow. And yeah, Tony, just let me elaborate a little bit more. No, if we have a directional trade, unless we're expecting a monster move and we want a bigger return on the capital, then we just our go-to for directional is in the money. But then, so when I say a bull call diagonal, if it's a core trade, you go a couple months out, go in the money, and then sell shorter term out of the money options against it. Similar, a bull call diagonal, again, you just got to, get used to some of these terms. But think of the bull call diagonal as simply a covered call. That's it, with the exception of, instead of being long stock, you're just long and in the money longer dated call option. That's it. Otherwise, it's the same. So you want to sell call options against your position with momentum stalls, exactly as we are, going to be showing you today in the webinar. All right, there's our decision up. So we have 50 minutes to go, and I think we have a bullish bias now. We watched that bottom form. Greg talked his way through it in terms of what people are thinking, and now we popped up. So as long as we don't have a bearish retracement on an intraday time frame, I think the low of the day is it's set. Yeah, Tony. Yeah, we don't like longer. We the longest I would ever go out for a core trade is like 5 6 months max. And the problem is because with the longer dated ones, like a year or 2 years, I think those are ridiculous to trade. And anybody who tells you to do them, then I just vehemently disagree. Because the stock could go up $10 and you're like, oh, high-fiving yourself, ready to cash out. And your 2 year dated calls are nowhere near up 10 because of the remaining time, and all of the Greeks aren't paying you. So yeah, so it's my recommendation for a core trade, just stick to 3 months. And when it gets close to expiration and you still want to core trade it for another 3 months, then just roll it out in time to another 3 months and whatever strike price makes sense. I mean, commissions are low enough. Don't get married to a leap. And a LEAP, that's just the acronym for long-term equity participation agreement, that will impress people at a cocktail party, but otherwise no need to memorize it. And the diagonal is a way to get out of Lin. Well, I'm talking diagonal as a brand new bullish longer term trade. So mixing that up with Lin, I think it's kind of apples and oranges. Yeah, we have a spread on Lin that's way against us, but at least we have a spread and it's not naked. So yeah, we'll address that tomorrow on expiration day. But yeah, again, back to your Tyson TSN, Tony. I like the monthly pullback to the 20 and the bottoming tail, but I do not like the daily. It's in a power downtrend, lower lows, lower highs after a breakdown, a gap breakdown at the beginning of April on volume. You got declining railroad 20 and 50 period moving average. The weekly was a breakdown, and you got two inside weeks, inside the prior long tailed week. There are so many much more appealing bullish patterns out there, in my opinion, than messing around with this thing. Because even if it did take out the week's high, Tony, where's your resistance? The next level of resistance is a multi-month breakdown. Compare that instead to what Greg mentioned the other day. This one, CV. Whoop, wrong window. Compare it to this one. CVNA is breaking out to new highs, relative strength. So I would rather the monthly's extended, I get it, and the daily's extended now too, but don't rush into it. If we can watch this for a week to 10 days, and it gives us a beautiful setup, then we might enter this core. GE, Greg loves that company.
Oh, I've got my whole family in that.
So Vince, if you don't mind putting it up, Greg, I like the pattern for GE. I even kind of asked Greg the other day, should we get this, as a kamikaze core long? Kamikaze meaning that's just my kind of friendly way of saying, you know what, we're gonna try to do some intelligent, betting here. The pattern says it, but there's still plenty of risk involved. And I didn't want to do it ahead of earnings, but it has that triple bottom on the daily, climactic buy setup on the monthly. It now has a higher high on the daily, so it broke the downtrend. But now you're asking me earnings tomorrow, if one is willing to buy and keep the stock at 1305 for 3 to 6 months, then absolutely. Absolutely, Vince. If you are willing to hold the stock at the calculated cost basis and are happy with that, absolutely go for it. In fact, because multiple expirations are going to be jacked up because of earnings, you're talking about selling tomorrow expiration. You can even sell May. Why not sell May's and get paid more for it? So see, so that kind of depends on your perspective. If you're saying, hey, well, here, let me look at the quotes and see what you would get paid right now for the 13 and a half. GE tomorrow, it's 18 cents. So 180 bucks on a 10 lot. If you are just saying, I really don't want to be in this thing, but if I have to, whatever, I can sell calls around it. But you don't mind making 180 bucks for taking the overnight earnings risk. And then plan B is to hold it like you're saying. Sure, go for it. Let me go out to May. So 29 days to expiration. Well, there is no 13 and a half put because it's the monthly. So you would have to go to the May 11s to get the odd half strike price. So the 13 and a half for 3 weeks, May 11, you can get 34 cents. So you're getting double the premium, but for an additional week of risk. So you see how there's no right answer to these things? We just teach you how to analyze the risk and reward, and you make your own decisions. So here's the question you want to ask yourself. Would I prefer? Oh, no, I said 1 more week. No, that's 3 weeks. I said that wrong. My bad. So you can make $180 for 1 day of risk, or you can make $350 for 3 weeks of risk. But also bear in mind that, you know, once earnings are out, the volatility is going to, you know, for all these strikes are going to fall. So you're still making good money even on this one 3 weeks out. So, you know, there's no right answer, but if you are happy with 180 bucks and, you know, you got your plan B in there, and let's say you did have a disaster gap, you could immediately sell. Let's say you knew you were going to get a sign because it was let's just say it gaps down to 13 bucks and you're short the 13 and a half and it takes out a 5-minute low. And you're like, you know, the odds of this rallying above 13.5 by tomorrow is unlikely. Then what you could do is then just short the $13 calls for May, and you got yourself a covered call on your hands now because you're going to get assigned the stock over the weekend at your 13 and a half strike, but you're now short a call. Well, you'd be short an in the money call. So it's up to you whether you wanted to short. Yeah, see, I'd say just short the 13 and a half call. So then you've bought it at 13 and a half. And you've sold a call at 13 and a half. So you got a covered call Monday morning on your hands. But yeah, look at the daily. The way it closed was yeah, Greg, your charts are, I don't know.
What?
Well, this is twice now. Maybe it's just the font size because on my charts on TradeStation, it looks like a minor 1, 2, 3 on the daily, but your red bar, yesterday's bar, is higher than mine a little bit.
Yesterday's bar?
Yeah, your red bar is a little bit higher than my red bar. Mine looks like a 1, 2, 3. And then when I just looked at yours, I'm like, oh, your red bar is higher. All right, you're welcome, Vince. And that is why.
eSignal has the same thing.
Okay. Yeah, so as
if market doesn't go up here, something's wrong. It doesn't start going up here. Things have been bearish all day, but mean, the way the setup is on the 5-minute, this should go up, attempt to go up. As soon as it gets above that, this high here.
But yeah, Vince, if anybody, tells me, hey, Dan, can I short a put on XYZ? And I don't mind owning it if I'm assigned with the reduced cost basis, then, although we might be able to help you, with timing using charts and or picking the right, strike and expiration. But just to answer your first question, is it okay to do it? 100% of the time, I'm going to say yes. Because if you're willing to buy it at the reduced cost basis, it is a win-win situation. You've either made your premium as full profit or you own a stock on sale. And that's why it just is mind-boggling to me that, the brokers and certain press try to say that selling puts are too risky. And so it just defies logic. So wait a minute. The broker will let me buy Google at $1,093 right now, but the broker will not let me sell a $1,000 put on it because it's too risky. So then if I'm assigned, and I'm just making up numbers, let's say I sold it for 50 points. So then my cost basis would be $950. Isn't $950 cost basis better than $1,092? But for some reason they say it's risky.
Yeah, and you're trying to make sense out of
I don't get it.
What a broker is doing based on a compliance officer. And, it's the same industry that's telling people that, day trading stocks is too risky. Meanwhile, they'll let them trade a crude oil contract. It's ridiculous. So,
right. And I would love to talk to a compliance officer or the SEC or anybody who can challenge what I just said.
Well, if it's not about that, they would say if you could get all the clients just to sign a document that says you will never sue me if you lose any money, do whatever you want.
Right. They're worried about lawsuits. Right. Here's how it goes. Right. You're right. And their attorney's going to come up with nonsense. But if you've taken my options course, then better. So yeah, that won't work. But I get your point. They're going to say some nonsense like, I didn't understand the leverage. I sold this and then it gapped down on me, and then I got assigned and I got a margin call and I, and then my wife left me, and it's all your fault.
That's right. I had, Dan, but I don't know, people listening. At one time, I was a licensed broker because not that I was a broker per se, but I owned a brokerage firm. So I had to be licensed with, Series 24 and a 7 and a 50, whatever at the time, and a 3 and this and that and the other thing. And I had a go around with the compliance officer telling me that I couldn't show a chart and talk about it in a webinar. And I'm like, are you kidding me? I'm showing an historical chart that's already over and talking about patterns and what has happened. And you're telling me that this is, something that the firm doesn't want to risk. Well, they did come around and reconsider that, but this is how a compliance officer thinks. They're not thinking logically. They're just thinking there is some amount of risk, and that is because, and especially that escalated after the Madoff thing, where every compliance officer now was under the gun from FINRA and the SEC, to just basically harass everybody with a license. But anyway, you cannot think logically with compliance officers and the SEC and FINRA.
Yeah. Yeah, no, I hear you. Our old firm was involved with a broker dealer, and FINRA was not pleasant. Well, as Greg just said, if we don't move up, it's not good. And look what's happening.
I just said that, to make the point of what was going on the charts. And
no, but it's very valuable, Greg, when you talk about the thinking behind the price patterns. So that's very helpful.
So that chart was set up where buyers were beginning to take control. And they lost control. So that 5-minute pattern there, I mean, I could show you this same pattern with a different arrangement, meaning not coming out of a bottom would have even higher odds. But as a bottoming pattern with the daily, the hourly that we talked about, blah, 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 another day it could have gone up because the pattern suggested it should. Now, so you got, short-term traders that are willing to take that as a shot into the close. They're now stepping aside. And as we come into 3:30, probably not much happens, but the longer this stays weaker, it goes weak into the close. And, now what I explained about assessing things day to day from the long side, right? While the longer term bias here based on what's happened here is still for prices to go up. Now we've made a very short term reversal down. So where I said track prior days lows and 50% percentage moves into the prior day, we now track prior days highs and 50% percentage moves into this day, meaning as it's going down, and we'll assess the reversal. Now, if it doesn't reverse at all, that opens up the door to what I explained, right? Possibly happening. The measured move lower into the support. And we'll see how that shapes up tomorrow. And Hillbilly Girl says, in our society, there's no personal responsibility. It's always someone else's fault.
Unfortunately, I agree with you. And I think that sucks. And I had to use that word to so you can genuinely feel my feelings. It does. I mean, I'm going to give you, it's the death of common sense. I remember in law school, there was this one case, and you just shake your head on stupidity. This guy was trimming his hedges by picking up his lawnmower. And the attorney said, well, you didn't put an adequate warning on it that I can't, trim my hedges with it. Well, why don't you also use it to trim your child's hair? It does. It irritates me greatly. It's everyone else's fault. Everyone's fault. And when I love traveling, I've been to over 60 countries, and there's not one single other country that I've witnessed that. I've been all over South America, Europe, Asia, And if you try going down to Mexico and falling in a pothole on the street and suing the government, they're gonna say, "Get out of here, you dumb SOB. Watch where you're walking next time."
You're
But
going to
here,
disappear.
they go overboard. There was, here on Fort Lauderdale Beach, they're doing some renovation now in the Las Olas area, and they could have removed a little tree. And Greg, there's four big cones with safety tape all around it, so you don't step into the sand where the tree was, so because you might possibly trip. And I'm like, that doesn't happen in any other place in the world. And unfortunately, a lot of that is the lawyers and in their bar association, because that's their paychecks.
Aren't you a lawyer?
Yeah, but I don't like admitting it because I don't practice it. But yeah, and that's part of the reason why I got out of it. Is I got tired of it. I have 100 times more fun doing what I do now. What are your top two favorite travel destinations? Good question. And I'm dodging the answer because it depends the purpose of the trip. Is it, cultural? Is it more of a beach, go with the guy's party situation? Is it to discover something new? But with that in mind, I love the French and Italian Riviera. I love, I've been to Monaco, Barcelona, Spain. I've been to 3 times. I made a trip. I went to all the Scandinavian and Baltic countries a year and a half ago. South America, I've been to Rio. I've been to Buenos Aires, which is absolutely beautiful and friendly. I have a bunch of friends in Cartagena and Medellin. I go down there, for a quick little trip here from Fort Lauderdale. We're really lucky to have JetBlue here because they have tons of great direct flights and you can get down there in 2.5 hours to many wonderful places. I have not been to Iceland. I do want to go to Australia and New Zealand. That's on my list. But yeah, I went to 8 Southeast Asian countries: Indonesia, Philippines, Cambodia, Vietnam, Malaysia. I went to Kuala Lumpur. I was impressed. But I wouldn't go back there to visit. That was more of a history trip. But yeah, I just love the beauty of the ocean. So I went on a cruise out of Barcelona, and it was fantastic. We had 5 different ports, 3 countries. That I would do over and over again. When I lived in Irvine running Greg's office, I went to Cabo San Lucas all the time because it was a nice 2-hour flight and just beautiful and fun, and got the water. Fiji, haven't been to Fiji.
Florence says Tasmania. That's where they grow devils.
Yeah, Tasmanian devil. That's right. That's where it came from. Yeah, Fiji is just hard to get to. Is the problem, and I am just thinking, and unless I brought a nice girlfriend, that I might get bored on a little island like Fiji. But no, absolutely, I'd love to go. It's beautiful. The lush, the ocean, the hotels, the waterfalls, the mountains. Yeah, I went to Bali. I actually flew home from Bali on that trip. And I was flying to Bali from Kuala Lumpur. And then when I made my connection, they said, "Oh, your flight got canceled." I'm like, "Oh, man, why?" And they said, because the volcano is erupting. Here, look at the spiders pop. Wow, look at this. That looks news oriented. That's some velocity. I'm not even watching the news right now, but that's velocity. That's the biggest bar of the day, biggest green bar. Wow. Does anybody see any news going on? What worst two destinations? I'd say the worst was when I was a kid on a cruise. I've been on 30 cruises also because I love them. I know Greg's probably thinking, when do you work? You sound like you travel all the time. All right, let's watch and see what this bar does. But that was an interesting bar right there. I'd say one of my worst was Haiti. And it's because I felt sorry for him. It was just a third world country pit. And I feel sorry for him. And then, a couple of years ago, they got struck with that bad hurricane, poor things. I've been all over Mexico, been to 13 cities there. I've been 11 different cities in Canada. Oh, I even went to Cuba last year on JetBlue. They had a special, and I flew for $114 round trip. Yeah, okay, enough of travel. Let's see if we can make some money. All right, so wow, this pop on the spiders now is a big bottoming tail. All right, so Greg, remember I was telling you earlier that if we sold those puts and the hourly closed at the high, you'd be kicking yourself. See, you got to pay attention when I say things like that.
Yeah.
So those puts, those spider 267s we were looking at. Are only 21 cents. They were 47 when we were looking at them earlier. But when we get, when volatility is high and we get confidence of a bottom, there's nothing wrong with going out a couple further weeks, because as I said, as soon as, at least if the bottom is not being violated, then we have volatility contraction and we have time decay that we're going to make money on those. That's right, John. Hey, one other thing to add to all my travels? Other than Cuba, well, in Haiti, because that was a long time ago, I'm not talking about a cruise ship because, they're harder. I brought my laptop and I can trade. I traded in every single country. All I need, so that's the beautiful thing of this. You have a skill that you can pull money out of the markets as long as the market's open and it's liquid. You apply these skills anywhere in the world, from your mountaintop in Fiji, from Tasmania, from China. Yeah, Tony, I've been to China 3 times, and I went to like 8 different cities there. Yeah, Snap, we got to keep an eye on him. Wow, Twitter was sure volatile today. Wow. But he's coming out of his 15-minute base. FND, we have a put spread that expires tomorrow. That looks good. It's the 55.50 put on FND. And we were willing to take assignment because of the weekly chart, but today since we were like 80% of max profit, or 70, yeah, 70, we sold it for 95 and it was 30 cents. I gave a stop, which held. So we'll let that expire worthless tomorrow.
Had to be some buy program that hit. I see, because I see it, a bunch of 5 minutes that popped and a bunch that did absolutely nothing.
Yeah, I mean, that's a good point. And buy programs and kick off other programs. And that's why we remember the mini flash crash. That was all started from programs, cell programs.
All right, let's take a look at something. Tomorrow is that options expiration, correct? I believe so.
Yeah, definitely.
I'm looking what strike has the big open interest.
No. Let me just clarify for our listeners. Every Friday is option expiration, but tomorrow is April monthly expiration.
Mm-hmm.
And then we have quarterly expirations, which also throws in the indexes.
Do the 269.50 calls have the big open interest? We may just have a nothing day tomorrow. We'll see. That was today's, right about today, near today's open. You think that's what moved the market, Hillphilly girl?
What did she think?
I don't know if she just put a statement. Justice Department sent referral to federal prosecutors for charges on McCabe.
Well, so we have to ask ourselves, what would the financial markets, why would that be bullish for the financial markets? I don't know. I try to keep out of politics.
Oh, those are the wrong expirations. That's what they're saying on CNBC now, John. Who cares?
What are they blabbing about?
What John put in there. Goes
Yeah.
down to tell Trump not a target of Mueller probe.
Oh, well, that makes more sense to me because, I was thinking about that too. If he gets caught up in one of these scandals where, Mueller or this, the girl, Stormy or, whatever, and, they start talking impeachment, it's just chaos and disruption and uncertainty to business. So that's why the market is going to go in a tizzy.
Well, tell Philly Girl is asking, what is a buy program? Well, buy programs could be one of two things. So buy and sell programs hit when, the futures market and the cash market get far enough from each other that these programs, they fade that or arbitrage it. The other type of buy program is a fund. I remember, I don't even, Smith Barney, I don't think is around anymore. I think they were bought by somebody.
Correct.
But years ago, I went down to Smith Barney's trading floor, and we were talking to a market maker there, and they, part of what they do as a service to institutions is a fund can give them a list of stocks to buy. And right, well, maybe it was too early for that now, but just before the close, within a certain amount of time, the service was to buy those stocks as a service. And if Smith Barney did not fill the order within that allotted time, right, they would provide the shares. So they took the risk of not filling that order. That was part of their service. So at a certain time, that type of a program could go off. And so while that market maker at the time, he kind of stood in front of the screen, so I couldn't see the particular stocks at that time or what was happening. I mean, he just pressed a button and the computer took it from there and started filling those orders based on some algorithm.
And just to add to that, over the last 10 years, there's been so much quantitative trading, are just referred to as the quants. And so they hire, armies of financial quants and engineers to come up with programs to make money. And so it doesn't just have to be like it was in the old days. These buy and sell programs are being triggered by whatever programs these quant firms come up with that their engineers and strategists say, have an edge to make money. And that's why, many times we get all these crazy whips all the time. In fact, in yesterday's Wall Street Journal, Cohen, the hedge fund guy Cohen, he's forming a new company with some other people to try to take on these quants that are interfering, with the, whatever. I didn't read the article, but there's so many quants that have been taken over trading as their little, toy to try to make a living out of. But they're doing it with pure mathematics, and we're doing it with charts and, swing trading, day trading, option trading. Yeah, Vince, I see anyone supports pro-Trump, this and that. You know what? I am agnostic. I mean, I have my own personal beliefs that I'm, not gonna. I just don't talk about politics or religion or anything that's going to cause a heated discussion because there's no need for it. But in terms of trading, I don't. I just want to use charts to figure out if the whale is going up, down, or sideways, and give me a compelling pattern. And we do what we do every day, and that's how we pull money out of the market. That's all I care about.
Dan, the market went up because of the belief that he would make some changes. So, I mean, that aside, if something was to happen to him, get run over by a bus or whatever, it'd probably be the shorting opportunity of a lifetime.
Well, and I agree with that for the following reason, because, so there are drastic differences between Democrat and Republican and who controls the House, Senate, President, all three, et cetera. Supreme Court also, it's politics. So you're right that if he has all these beliefs that have been pro business, and you're right, the market's been going up on that. So if something happened to the decision makers who implemented those policies and the threat or risk of them being reverted, I know like Pelosi, whatever, and they're talking about, oh, they want to try to get into power and repeal the entire tax plan that was just passed, all the tax revisions. So, one party votes it in, and then what? The other party's just going to exit right through, and then that's major disruption to businesses and beliefs and planning. So, yeah, I totally agree.
So today basically was a sleeper. Right? The transport's down 1%. It's a daily here. But really just correction day within this move up. Qs down less than 1%. It's certainly, that little blip that happened for whatever on the news, it's giving back. There's 2 minutes to the close, so far, like it's given back, and whatever the reaction was at the moment, it's like, okay, no big deal. And now the hourly spiders look like they'll close with a topping tail, and that reestablishes the possibility if it'll break under this low for the measured move lower, which based on the daily chart would not be such a big deal anyway, and where buyers should be willing to step up. I'm kind of curious, looking at that open interest, sometimes that big open interest, and I don't know historically on options expiration, what's close to the money is big open interest. That I don't know. Like, you have any idea, Dan, as to what kind of open interest near being at the money would be big for an S&P contract, S&P Spiders contract?
Well, yeah, you just look at it and all you do, it's not a number you pull out of your pocket. It's all relative to the other open interest. So you're just looking for the outliers.
No, I know that, but I'm just saying, like, historically.
Oh, no, I don't know.
So, right, the 269 calls, open interest is 45,000. And so that's where things are at right about now. And on the put side, 270s, 128,000. We shall see in the morning. All right, buddy. I wish we had more excitement here. Things, setups here, but you know, it goes that way at times. And typically, when they do, we come across more ideas than you can possibly handle. But
That's an understatement.
yeah, I mean, you know how it goes, of course.
Right, but the flip of that is, yeah, I mean, you gave some day trading ideas along the way. I didn't take one single trade today, and I was talking about that yesterday also. The hunter doesn't just, go out into his deer stand, start shooting. You got to wait for your setup. So it's patience, discipline.
Yeah, but a narrow range day like this, it's not unusual for there to be limited amount of things there. And whatever reason, buyers not giving up on these oil stocks just yet. So um, I will be back at them tomorrow.
Hey, Greg, if you want to open the other Zoom room, I'll just put the the cover sheet on.
Vince is asking for the link. So let me see if it's still.
Yeah, it should just be up there that I pasted earlier.
Hold on. Here it is, Vince. And then you get the actual link that is unique to you. So once you register, it gives you your own link. Well, actually not. That's just how this room works. The other one is, share it with the world if you wanted to. It's not unique to a specific room. So right. Yeah, let me open that up.
But yeah, Vince, it's on Zoom, but not in this room. So you just got to click this other link.
All right, everybody. We will talk tomorrow. Have a great night, and let's listen to the man Dan about the options.
All right, 4:15 sharp.